Gauteng government, in collaboration with the Industrial Development Corporation, which is the IDC, and the SA SME Fund, have launched a 300 million rand SMME Crisis Partnership Fund. This is aimed at reigniting the township economy. The entities contributed 100 million rands each towards the loan-based fund, which will be managed by the SA SME Fund on a pro bono basis. For more on this, I am joined by Jack Koseff, who is the DDG in the Gauteng Department of Economic Development. Jack, thank you so much for joining us this afternoon. Now, the fund intends to enable township-based businesses to access funding that is essential to business growth and job creation, and to reignite the township economy and elevate it to respond to the current needs of the society. What have you identified those needs to be?
So if we look at the township economy, the way that it has taken shape, particularly in Gauteng, it's actually a huge frontier of opportunity for economic development that is being underserviced from the point of capital extension. So if you are looking not only at what people assume the township economy to be, which is a cross-cutting series of taxi associations, shebeens, spaza shops, the kind of more informal economic actors that are heavily associated with it, and you begin to understand that there's a huge diversity, firstly, of businesses that can work in those sectors and upgrade themselves, as well as those that can basically create businesses in a range of other sectors. The township economy can become a real mechanism for confronting and finally structurally kind of eliminating a large amount of unemployment in Gauteng. But to do that, you need to be able to give businesses in these areas, in the new township enterprise zones that are being created by the Township Economic Development Act, they need to be able to access financing. The traditional banking system has always struggled to profile, de-risk and manage credit extension into these areas. They just consider the businesses in question to be too high risk. And what we've done as part of our Township Economy Partnership Fund, which is a larger fund that is funding this particular fund we're talking about today, is we've partnered with the SA SME Fund, who in turn have a series of intermediaries that they have enabled to do things like purchase order financing, asset financing, asset management, as well as a variety of other loan types that are specific to the township economy. For example, in the launch with now outgoing MEC Tau on Wednesday, there was a very clear indication we'll be driving the upgrade of backyard shack areas into infill residential, which is basically converting the kind of spaces that are currently filled with informal backyard shacks into more formalized, still affordable rental accommodation with all kinds of businesses that can be put in the same structures, because you're now building 2 or 3 stories up. So these are the kind of financing needs that are possible because government has blended its money as a first loss reserve with private money that then is extended on a kind of weighted risk basis to these township firms at much more affordable rates than would be available from the market. And that's really the kind of secret sauce in terms of how this is working.
Making a mention of the banking system that often makes it quite difficult for SMMEs to access money in South Africa, through those traditional funding institutions. How different will the experience be this time with this funder for these small SMEs within the townships?
Kadleko, that's an excellent question, and it's dead on the nose, because what we have discovered is while they might operate with the best of intentions, the high street banks do not have really the ability to fully credit score and manage and engage with these SMMEs in these township areas in a way that reflects their genuine risk as basically people that can take a loan, repay that loan, and operate a business. Instead, what the banks tend to do is they tend to go with the lowest risk option, which is they will ask a business to do what they would ask a business in Sandton or in an industrial park in one of the more established parts of Ekurhuleni, for example, to do, where they would ask for a banking history, they would ask for a variety of things that a formal company will always have to kind of have it in order and in thorough detail before it goes into a bank. In the township economy, you've got a lot of very viable businesses that simply do not have these things. So a lot of what the intermediaries that are being enabled through this fund have to do is find much more creative ways of engaging and de-risking doing business with the township businesses they're lending to. So, for example, they might use data instead of demanding collateral. They work out based on the data that they can get about the business. For example, the data about its cash flow, based on the way that it interacts with systems that they help set up. They can then tell that, no, this business is a viable business to lend to, even though it's never had a formal banking history. They can also do things, as with Inlu, the intermediary that's dealing with the backyard shack financing. They can wrap around an ecosystem that supports a specific kind of business. So in Inlu's case, they've got an end-to-end support for landlords that are ready to upgrade will allow the space in their properties to be upgraded into new kinds of developments, replacing the backyard shacks. It's not just a loan for build program. It's got a whole support system for them as landlords, including the collection of rental, the management of services, all kinds of things are added together. And that means that you don't need the main house owner, the main property owner, to sign a mortgage, which would be a very difficult thing for a lot of these owners to do, because this is the first real capital asset that's been in their family in most cases. To tell them to put that all at risk is often very difficult. Yet, Inlu have worked out through all the de-risking they do, through wrapping support and systems around the landlords, how to lend to these kind of businesses without that. So, a long roundabout answer to a very straightforward question. It's going to be much more structured so that a township-based business will find that its circumstances are understood by the people that are doing the lending, and the questions that are asked are going to be about, is your business a going concern? Not, does your business have a whole lot of compliance baggage that you may not be able to bring to the table.
I want us to further unpack a little later on the program and the support system that this has for those that would be benefiting from it. But you make mention of the 6 intermediaries. I mean, the fund is already committed to 6 intermediaries, with a 7th in the pipeline that will facilitate the provision of working capital and asset finance to hundreds of small businesses and entrepreneurs. How did you go about in selecting these intermediaries?
So the process of the Township Economy Partnership Fund is quite specifically designed to create a space to blend capital with the private sector. The way we did it, there's been an open window that's been advertising since March for partners that bring match funding into this thing called the TPF, the Township Economy Partnership Fund. So this particular partnership that we're focusing on, the SA SME Fund, applied to that fund. So the SA SME Fund, which in itself is an existing vehicle that's created by the top 50 listed companies and has owners ranging from the PIC to just about everyone who's a big shot on the JSE, they came forward and said, we are ready to put together this funding instrument where we're applied through your window. You then have to vet us as a partner, and this is what we can bring in terms of match funding, and this is the way that we will get the funding to the SMMEs. And they made it very clear the kind of intermediaries they would be engaging with to create that kind of capability. In so doing, when they were awarded, so they went through a full due diligence process run by the IDC. So the way the partnership fund overall is set up, and this is only one partnership under that fund, by the way. There are others. For example, you might have caught mention in recent news cycles of the work we're doing with Family Tree Holdings, which is a retail support cluster for township retailers. That's a 100 million rand partnership between ourselves and Nedbank, which is a different fund, but it's all part of the same overall umbrella, which is the Township Economy Partnership Fund. So in the case of this specific fund that we're discussing today, which is the SMME Crisis Fund that's been set up by the SA SME Fund, that funding, once the SA SME Fund applied to the TPF and went through due diligence and were awarded through the process that's been agreed and has been confirmed as compliant with all the laws of the country, etc., they then were responsible for nominating which intermediaries they would use to get the funding directly to the SMMEs. And they themselves ran a market scan in their own right as a private sector partner, and they also basically worked their networks across their various shareholders to identify who would be the most trusted parties to be able to do this kind of work. And that's how those intermediaries were selected.
Right. So if I'm listening to this and I'm an entrepreneur, what would I need to qualify in order to get this funding? Would I need to own the title deed to a house, for instance, in the township for me to be able to erect the back rooms that I would then be able to rent out?
So because there's 6 different intermediaries, this one is a little bit different to some of the other things we're doing under the Township Economy Partnership Fund. So, for example, when under our retail partnership, it's much more straightforward. You've got to be a member of one of the retail networks that are set up under that fund, and then you qualify by virtue of applying, in that case, to Family Tree Holdings. In this case, the intermediaries will have different requirements for different kinds of funding, but all of it's designed to be inclusive. So if you want to upgrade your property to include, so you've got backyard shacks at the moment, you want to upgrade it to include multi-story flats and small businesses, you will need ownership of that property, but you will not need to sign a mortgage. You will not need to put the property up as collateral. For the other forms of funding available, for example, purchase order financing, asset financing, and working capital, the main thing you need is viable cash flow. So you'll need to be able to demonstrate, I'm a going concern, I'm a business that has cash flow, I might be largely informal, I might not have all the things that a bank would expect me to have to qualify, but I can demonstrate to you that I'm a going concern. I can demonstrate to you that I've got money coming in if I can get the loan capital to do the right things. To refresh my stock, to build up my equipment, to do whatever I need to do to basically make the next purchase order, to serve my customers, to create the value that I need to create in order to make money. And the various intermediaries that we are working with under this fund basically have also committed that they will also work with us under a government portal that will help those who don't have a clear idea where to start. So to be directed. So we'll be announcing the deployment of that portal this coming week, so on the department's social media, and it will allow businesses that do not have any idea where to begin to kind of say, okay, this is my situation, who fits me under your intermediaries? Where can I get help? Which door can I knock on? And we will direct them to those doors and also give them a sense of the kind of things they'll need along the way. Of course, the intermediaries that have been announced, Inlu, Profit Share Partners, Creed Capital, these can be approached directly as well. But for those that are really, really unclear, we will be providing a bit of a hand-holding service to at least direct people to the right intermediary and help them to source the documentation they might need to meet those intermediary standards.
Now, a little earlier on, you touched on the support structures. Now, beyond the funding, will the beneficiaries be assisted with support to not only managing this working capital effectively, but ensuring that they run impactful and profitable businesses?
So it's a bit different per intermediary. So if you're with, for example, Inlu, yes, there's a huge amount of support structure that comes in because they're doing quite a complex thing. They're taking the 4 million people that live in backyard shacks across Gauteng at the moment, and they're treating that as a form of real estate. And the owners of the properties that contain those shacks as potential real estate owners. Not to displace the people that live there, but obviously people to build in place not only rental and better rental and much more dignified and much more high value and a high spec rental than anything that's available informally, but also various kinds of opportunities to house businesses in those same areas. So there's a very big wraparound support program that includes end-to-end management of property. If you're getting purchase order financing from the various providers or working capital from the various providers, there is a level of business advisory that is built in because it is in the interests of those intermediaries to basically make sure the money comes back. The best way to do that is to make sure that that appropriate systems are in place for you to make the money as a business. Obviously, there's a lot of businesses that will come into the system and not even have the basics to be able to structure what needs to be done to handle capital yet. In that case, we've set ourselves up as government to say, wait, we can direct resources to help you with at least getting your systems up to a basic standard. And this is part of the massive reconfiguration and the reboot of the Gauteng Enterprise Propeller through which we're doing this. So the same portal that I was mentioning that will help guide you to which intermediaries you need a door to knock on. If it's very clear that you need a whole lot of additional things before you can even knock even on those more open doors, then GEP is setting up systems and mechanisms to provide support to you. So if you need to set up, for example, a very basic business bank account, if you need to get your CIPC registration in order, all of these kinds of things are going to be prereqs even of a more inclusive lending system. But these are the kind of things we can support and basically manage as government. So there is a level at which the state is going to subsidize support. There's also a level at which the intermediaries themselves provide a level of business development support as part of their reducing the risk that you as the business they're lending to will default.
All right, that's Jack Koseff. Thank you so much for giving us your time this afternoon and unpacking that 300 million crisis fund that is aimed at giving an injection to township economy.